When you really absorb or try to absorb what is going on amidst the confusion right now in London about Brexit, how does it affect your decisions about whether to invest in Europe, whether to invest in England? What are the likely ramifications in the marketplace?
Well, I think the most important thing is to try to identify what the bigger factors pushing things are going to be. And while Brexit still has to be hammered out, you know, the truth is that the UK unemployment rate is the lowest that it's been in over 40 years. The inflation rate's been rising. And even though you know, we're hearing this forward guidance that, no, it's not time to raise rates, we're not going to be tightening at this point, the data definitely show that if Brexit wasn't going on, that would definitely be something on the table, given where we are with unemployment and inflation. And I think we really can't avoid those fundamentals much longer while this continues to get worked out.
So, Michael, where are you on this? And listening to these speeches, I was taken by the fact that there was a real emphasis on productivity and investment, and the need to get investment going. Is this something new, or is this something that has been talked about all along, but not much has been done about?
No, this has been going on for years, and in fact, if you look at the numbers for the UK, they're actually quite shocking. I mean, the trend productivity growth in the UK economy in the 30 years leading up to the great financial crisis was around 2.25%. We're now at around 0.25%, and some said, well, this is the sort of productivity growth you would normally associate with a slave economy. And of course, you know, for the people keeping an eye on the output gaps, such as the Bank of England, talking loosely about slack in the economy and how that might frame the trajectory of interest rates in the UK, it's a big problem, and ultimately, of course, it's the determinant of how fast the UK economy can grow. The problem is, of course, we've had this external shock via a significant depreciation of the effective exchange rate, and this is currently pushing on a UK economy where there is supposedly very little slack. It seems strange to me, by the way, that you know the Bank of England got their numbers wrong on the way down, and it looks like they're getting their numbers wrong, to put in a golfing analogy, on the back nine as well. You know, we've had this 2% growth rate, which they've now trimmed. We had a relatively benign inflation rate. They moved a little bit in May for those to converge to some extent. But I think, you know, if you actually look at the incoming data, it's actually painting a very stagflationary picture.